Hi, and welcome to my strategy series. In these videos, we're going to be looking at quick ways to analyze the markets, and in this video, we're going to be looking at hold levels. First off, a hold level is exactly what it sounds like. It's a level that must hold the price. Now, how we define hold levels is by a body or a wick of a candle. It either can be the wick of a candle, which represents the test of that exact level, or the body as the greediest point of that same level, or maybe something deeper in the time frame. So when you're deciding between a body or a wick, first off, important to know that either can be a test of a level. So in this case, it didn't test the body of this move. But if you actually went here, it did test the wick, which is the same thing as testing the body. It just has to test one or the other. And typically why this happens is because the body of a candle acts as the greediest point, which sometimes can be a hold level on a different time frame, which is the wick on a different time frame, or the body of a time frame within time frames, or it's the actual wick testing maybe the backside or the front side of it. So a hold level can be anything that's a wick or a body. It tests one time and that's it. Now, when you are buying hold levels, you need to realize that on the bottom side of your chart, you need to use the opposing color than what is on the top side of your chart. So for example, if you were to use the bottom side of this candle, well, you would have that exact candle here. You would not have the same color candle. It's going to be opposing candles. So when you're trying to hold a level in accumulation, it's going to be a distribution candle. And when you are shorting or holding a candle in distribution, it's going to be an accumulation candle. So important to know, a hold level must be one of those two things and opposing sides. Now, how do you use hold levels? Hold levels represent that they are trying to hold the price going in that same direction. So if you were to use a hold level, what you want to do is you want to create a rule at first. It says, okay, this level has been tested once already. Okay, so that's great. This one's tested. We can no longer use it. We're going to leave it there to follow the trail. Well, the next hold level, if you were to follow this with your eyes from this point here, straight over and up, the next one would be right there. That's the lowest one connected to that point. So you can use that same candle. You could use the body or the wick. So we're just going to mark the, oh, well, okay, you know what? We'll mark the wick. We'll keep all things even here. And you can see that's exactly the level it had tested. So you're not going to go and test this hold level as it's already been tested, but you will be testing this one. Now, here's a cool thing about hold levels. A really smart way to use them when you are trying to set a strategy, what you do is you always use the highest time frames down. So what we're going to do here is we're going to go to the daily time frame. Of course, there's nothing on the daily here. It is too short of an interval of time. Aha, but we do have the daily over here. Okay, so we have a hold level here. But now here's where it gets interesting. This is where you dig down into your levels to say, I want to test things that are on a lower time frame, but completes the same test. So anything from this moment down would technically be testing the daily level. Well, how do you decide where to put a buy order? You can go down in time frames and see, hey, where are all the levels inside of these candles that represent an untested moment? Because, hey, if a candle went straight down like this, a big wick happened, maybe it's testing the daily, but maybe it's also testing the 4 hour, the 1 hour, the 15, and so forth and so forth. So a really great strategy, and we're going to change the color of these candles, is to go like this. And you go and dig down into time frames. So red is daily, yellow is 4 hour. Go make a blue one, which is the 1 hour time frame. And what we're going to do is we're just going to cut this off here, use the replayer tool right there. And we can mark the 1 hour here, which is right there. Color that blue, keep this nice and organized. And if there's a 15-minute, well, we'll color that another color too. And so you can see the 15-minute actually is below this right here. So we can say the 15-minute is here. But technically, the test of this 15-minute level, well, it would actually be right here is the lowest one. This is the untested one. And right here kind of suffices as that same level as well. This is tested. So right here. So anything, and that's tested too. So you could go right here and you mark this one as gray. So now you've got all your levels marked out. So typically what's going to happen, and this, I don't think we need to go any further. Okay, you know what? Let's mark a 5-minute level as well. Let's just make sure we do all of our work here to mark all of the levels. And the 5-minute level is right there. This one is already tested, as you can see. So this would be the next one that's untested. So you've got kind of everything in the moment that could count for, hey, we're dumping the markets. What level are we going to hold? So let's talk about this for a second, because this is crucial to developing our strategies. In a moment where you are going to test a daily level, realize the only thing that it has to do is close over top of this level here. And we're going to mark this one a different color. We're going to go with a red that's not quite the same red, maybe something a little lighter, and we're just going to make it thicker. So really the only thing it needs to do if it wants to test this daily level is it can test all the way down into the depths of this daily level, far all the way down to the 1 hour, the 15, as long as it's closing over top of that greedy point on the daily candle, the body of the candle, as long as it's closing over top of that, or not hard closing underneath this line. And if you want to know what hard closing is, go and take Future of Trading. I talk all about hard closing in there. So as long as you don't hard close under this, it's perfectly fine, because what's going to happen a lot of times is it's going to say, hey, we tested the daily level, but we went to the greediest point within that daily level and we still continued to close over top of it. So now if we just kind of take the replayer tool off and see exactly where this thing goes, well, then you have your daily level test and the greediest level inside of that daily level. And there might have even been something greedier that we just simply didn't mark out. Let's go check the 3 minute. Check the 3 minute and the 1 minute. Is there anything inside of this that's even deeper in the move? Well, you can find that out by going here and doing your work. So this one's tested already, can't be that one, which means it could be this one. Well, it can't be that one, but it could be this one. That's already tested. Well, what about this one? So it can go as high as this or as low as this. It hasn't come over top and tested it. And what about the 1 minute? Is there anything there? Data's not available, too far back. No problem. We don't really need to know that far back anyways. So then when you're looking at this and you're saying, hey, where can you go in a level, and you test a daily level or a weekly level, how deep in that level can you go? And you can see that you can actually go quite deep, because the level may exist down up here, but you can still draw down another almost 4% on this trade, as opposed to just taking that greediest point in the move, measuring it down, and yeah, you're within 0.5%. And then you could get even greedier if you wanted to use some other techniques, but this is a really good strategy when you look at hold levels. So now if we were to do the same thing here, you could probably find some really good opportunities as well. I think the daily is a little too fast to say, hey, we haven't had enough time here. Let's not use the daily. Well, what about the 4 hour? Well, that's a great start for the 4 hour test of the hold level. What can live inside of that though? Well, let's go take a look. So we're going to mark this as yellow, nice and thin. That's what we do for 4 hour levels. We go to yellow, nice and thin. Let's mark the 1 hour, and you have this here, which has already been tested, and then it moves up to this here. Well, this one wasn't tested. So you have the 1 hour inside of the 4 that is showing you, hey, you can test down to the 4 hour level, and you can actually go and test one time frame deeper while still holding this 4 hour level. So now what you've done is you've gone and you've found the 4 hour level, the strong level in the move, and you've gone to the deeper depths of that level that all it has to do is test that and come back over top of it. You could go even deeper into the 15 and say, hey, maybe there's a 15-minute level here. Well, it looks like that 15-minute level would be all the way down here. And it could be anywhere from these two. You could even be down all the way down here. So with marking that, let's mark this one as the untested 15-minute level and see what happens here. Well, and that's where we are right now in the move, the 15-minute level. So by doing this, you can go inside of time frames and find the spots where these trades are going to bounce. You can go inside these time frames and say, okay, we have a range here that actually starts back here from the backside, but we have a 4 hour hold level. And if I want to take a greedier entry, I can start digging down into time frames and seeing, hey, there's some smarter trades that happen here, and greedier prices that all that has to happen is it has to hit that price and move up. So in this case here, that's exactly what happened. You went after the 4 hour level by attacking the deeper part of its move and moving over top of it to try to establish a move up. Well, clearly that move up didn't happen, and then it went to the next part of its range. And you could even go back into here and say, okay, well, what else is inside the 15-minute? You could use that same theory all the way down to 1 or 5 minute candles, or as deep in a move as you want to go. And you could say, okay, well, it can't be the 5 minute level because the 5 minute levels are already all tested. So this 5 minute level was tested there. So it can't be that level. So we can automatically rule out the 5 minute level. What about if we go deeper? Is there anything else? The 3 minute level, same thing. It's already been tested, and so has this one. So you can see this level right here has been tested. Voila, tested. This one, tested. Can't use that. What about the 1 minute? And the 1 minute, it had an untested moment, but yeah, you'd have to go pretty deep in this range. I don't think we're quite there yet. But hey, maybe this is the level that can hold up the entire trade because it's a 1 minute level that's all the way deep down inside of this 4 hour. But I think at this point, I would feel comfortable taking that 15-minute level and nothing else. And it looks like it's not really having any success anyways. So this is how you have to treat hold levels, and a great strategy moving forward. Anytime you see a level, and you could do the same thing on this side too. Anytime you see a level on your charts right here, here's a backside level, for example. Here's the 4 hour level right here. How can you go further inside of this level to see what actually happened in the move? Well, you could go to the backside on the hourly, and then you could go and you could dig down even further in the move, and you could find the 15-minute level here. Well, it looks like this one has been tested here. So next you'd be down to here. And it looks like this one was already tested there. And that's exactly what you get. So now you can go even deeper into the move and say, well, what lies inside of here that's not tested? So let's go to a 5-minute chart, see what's exactly happening in the moment right now. You're right here. This 5-minute has been tested. So you could simply just go to this 5-minute right here. No 3-minute. What about a 1-minute? You have this guy right here. Take off our replayer tool, see exactly what happened. And you probably have the deepest part of the range that hasn't been tested. Let's just hit that auto button, that lovely auto button. Scale it back, go to a 5-minute chart so we can see a bigger time frame. And voila, you have the greediest part of that entire range as you've diminished down the testing of different levels. So this is a great strategy to look at hold levels, and it'll give you awesome spots where you can enter the trades. And if you're ever wondering what time frame to use, you can always go back up in time frame and you can see which levels have been tested. So if I had a question here that said, hey, maybe I should use this 5-minute level, well, I could see that the 5-minute level previously had already been tested. And if I want to go to that 5-minute level, I can go deeper inside that to find that original 1-minute level that we first found. So then you have the 1-minute level inside of the 5-minute level, that's inside of the 4-hour level, that's inside of the 1-hour level, that's inside all of the other levels. So you have the combination of all things combined. So you have every single level combined to show you where the point of polarity or the hold level should be. So that's your strategy for hold levels. Start high, work your way down, and find the spots that are untested, with the understanding that as long as you don't close under or above the bigger levels, you can still go in that range and then move extremely off of it, extremely down or up, or whichever direction you want to go, just like you saw here with the 4-hour, or just like you saw down here with the 1-hour. So that's a crash on hold levels and a smart way to play them. See you on the next one.